What we wanted was a safe haven treasury reserve asset that was going to appreciate faster than the rate of monetary expansion. So we looked at real estate, we looked at bonds, we looked at stocks. That none of those things work because they're all fiat instruments and they're valued based on the cash flows. And if the money supply expands and debases, the cash flows are going to debase as well. There's a better idea, which is digital gold. And digital gold is everything that you love about gold and everything you don't, and nothing that you hate about gold. So it's like pure pharmaceutical grade gold. And then we looked at every other crypto and we figured out what's the dominant network that's most likely to get the lion's share of support from other investors with similar interest to us. And the conclusion was Bitcoin, because of a commitment to proof of work. And if you decide what you want is a proof of work crypto network, well, then Bitcoin is the largest. And the issue is you got to pass over Ethereum, because Ethereum's transitioning from proof of work to proof of stake. And if you're going to actually put $1 billion on the network, you have to have 3 to 5 years of experience of a stable network. And so I asked me 5 years after Ethereum 2.0 comes out how I feel about it, and I'll have an opinion. But right now, I can't, as a fiduciary, bet on something that's about to go through a massive architectural change. If it was up to me, and it was just up to me, then we would have just went and bought $500 million worth of Bitcoin as fast as we could.
Sure.
But when you're a public company officer, you're a fiduciary, and you have to consider how you communicate this in a responsible fashion to all the outside shareholders and all the other constituents that are involved. But we went through pretty extensive deliberations, and I explained to the board my thoughts. And obviously I told them that I had acquired Bitcoin myself, so they need to understand my situation. Then after that, we considered as a team the regulatory issues, the financial issues, the risk issues, the other macroeconomic options. And that was pretty decent amount of deliberation, a lot of one-on-one meetings, a lot of group meetings, a lot of research. After we went through all that work, we actually arrived at a measured strategy, and the strategy was, multi-pronged. First, we announced to the entire marketplace that we're going to pursue a strategy of a combination of stock buybacks and asset investments in order to protect the balance sheets. There wasn't another crypto that was looking like a store of value, proof of work, network that would be a treasury reserve, and that's why Bitcoin was the straightforward. We went ahead and we allocated all $250 million to Bitcoin, and then we announced a tender offer to buy back $250 million worth of the stock at a premium. Most of the shareholders liked the idea.
Right.
They stuck with us, and the stock traded above the tender offer price within a couple of days once people digested it. And so then we bought back the 60 million worth of stock, and we had 175 million extra. And we modified our treasury policy. We announced to the world that now we weren't going to be limited to 250 million. Once they digested that, we bought some more Bitcoin, and then we put that on the wire. So then we had 425 million worth of Bitcoin, but eventually we had $1 billion worth of Bitcoin.